Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. It is Friday, August 1st. Happy August. This is the show that catches you up on all of the notable moves across financial markets, and there were lots of notable moves. Not a sleepy summertime trading week. It was action-packed, lots of headlines. Hope you made it through okay. Let's get into it here. Before we do, our sponsor, IBD Investors Business Daily, makes this show possible. Thank you, IBD. We've got links in the description of this show to get discounts on their market search software and their digital subscription. Check them out in the description of this show. Now, I want to start with this chart. This chart that we spent a lot of time talking about. In fact, we spent a good amount of last week's show talking about the froth, the excitement, right? The courageous traders, the meme stocks that were starting to pop up, right? And we made it a focus point last week to talk about some of the risks in the market. Now, of course, we didn't say next week's the top, and we didn't call this by any stretch of the imagination, but we did talk about having a plan, having rules, being disciplined, understanding where you are in a trade. And we posted this chart not to cheer on again that the stock market won't go down or will never go down again. It's again to illustrate the fact that we had gone 3 months without a deeper than 3% correction. That is unusual for the amount of ground that we covered, and we talked about it, and I won't go any further. But this week, of course, was the unraveling of that, and we're gonna dive into the charts later. We're going to open up TC2000. We're going to look at this price action pretty closely this week. So that's what we had kind of coming into this week. We had lots of catalysts, right? I don't think anyone should be taken for surprise. All the catalysts, we basically said last week again, like this is the excuse for the market to move. There is Fed, there are all the earnings, there's the jobs report and everything in between. Tariffs we didn't mention, but tariffs were something that we got hit with again this week. So escalating tariffs on multiple other countries, higher rates, the goalposts getting moved again, but just creating more confusion, more uncertainty, more kind of strong arm action here for the geopolitical tensions. The market is dealing with a lot right now in terms of news and digestion and catalysts. And this was kind of another one that got thrown into the mix this week. So tariffs back on the table, just can't escape them. The market is now going to have to figure out how to price this in. We did get Mag 7 performance earnings out this week. Not all of them. We had a trickling effect over the past 7 days, but I just took a snapshot here. We're going to look at this price action a little bit later in this episode, but here's how they stacked up this week. So again, a mostly negative week here for the Mag 7. I'd say the earnings, just generally speaking, they were mixed. I think depending on whose headline you're looking at, some are going to say better than expected and some will say disappointing. The price action may have been disappointing, but I think lots of the numbers were, again, pretty decent. Jobs report Friday, weaker than expected, much weaker than expected. And so this now starts to throw a little bit of a wrench in how resilient the economy is, and this recession talk that is now kind of creeping back in as the, just the numbers were far below expectation. And so because of that, one of the benefits of a weaker economy is that Fed put, right? So Federal Reserve Chair Jerome Powell was out on Wednesday. They had their FOMC meeting. They did not change interest rates. They kept things steady, and they basically said, wait and see, right? And that was Wednesday, and now Friday we get this much weaker jobs report. We get escalating tariffs, and now we have a lot more uncertainty that is coming into this market. And so the real stark contrast number here is the 1-day move for next September now. So the market on Thursday was pricing in, call it a 37% chance of a rate cut in September. And those percentages jumped to almost 90% on Friday after the jobs data. So September now seems like a live meeting for a 25 basis point cut. That's certainly what the market is going to be anticipating now. And so we shall see as we get closer if this begins another rate cutting cycle next month. All right, let's get into the numbers here. So performance this week, red across the board and sharply so, 2% down all the way down to 4% for the small caps for US stocks. This is what the return looked like this week. So started at the highs of the week, life was good, and then we slowly kind of grinded lower, and we had a very tough Friday. Notably, and we're going to look at this closer when we get into the charts, so we won't spend too much time here, but we had a nice kind of climax, excitement, euphoria Thursday post earnings. That was who reported on Thursday? I already can't remember. It feels like months ago. But we had two of the Mag 7 reporting on Thursday. Stocks opened up at highs and then just got aggressively sold. VIX took off. So from 15 and from subdued new recent low levels here, we saw the VIX jump and see one of its biggest moves up in a single day in quite some time. So a nice 4 or 5 point move back above 20, a little healthy dose of fear, kind of waking everyone up from their vacations if they haven't been paying attention to the market. And the US dollar has really had a roller coaster sort of week. It was ramping up midweek and then it kind of rolled right back over. Some pretty big moves happening for the USD, but we'll take a look at that a little bit later. And then 10-year treasuries. So this is interesting, right? Because we are now finally starting to see bonds acting as a little bit of a hedge. Now, of course, this goes hand in hand with dollar movements, but it also goes hand in hand with the Fed expectations of perhaps that September meeting. And so we are starting to get the 10-year yield, and bonds in general actually looking pretty decent here. They've been range bound, they've been sideways, there hasn't been any sustained momentum. Now they're coming back down towards below 4.25. So we'll see if that can continue. Now, sector performance this week, you only really had one place to hide out, and that was utilities. Everything else was in the red this week, and definitely sharply so here with materials. Healthcare still not providing too much of a defensive tone. There's just been lots of problematic issues there, United Health being one of the biggest, and then consumer discretionary down almost 4%. We've got one sector in our smart trend filter indicator that is bullish right now, and it's utilities. Surprise, surprise. So this is our price and volume price action relationship indicator. It's available for TC2000 and TradingView users if you want to get this on your chart. But it basically is measuring path of least resistance, kind of keeps you in those trends and trading in the right direction here. On the neutral side, there's lots, right? So despite the fact that the market sold off pretty aggressively on Friday, we still haven't got any clear turn down signals here yet. I would suspect you're going to see a lot more of these turn negative and red early next week, especially if we don't see some type of sharp bounce back. But let's see what happens, right? We could get a bounce back depending on the events from the weekend. So let's reserve judgment. But for now, there's lots of stocks kind of in the middle there. And then on the downside, three bearish sectors here: healthcare, staples, materials. Those are all in confirmed downtrends. Now, if we take a look at 52-week highs and lows, notice the spike here on the right-hand side. This is as of Thursday, so this spike has only gotten bigger. Friday, we're going to probably see a triple-digit number here in the number of stocks hitting 52-week lows. So we're going to start to now finally begin to see more stocks hitting 52-week lows, something we're going to want to pay very close attention to, because if we see continued, breadth deterioration under the hood, we're going to run into some problems here. We're going to get a lot more nervous about the resilience of this market. So let's take it day by day. Let's see what Friday's numbers are. They won't close for me and for another couple hours until I get the final numbers in, but we'll be able to review that next week. Percentage of stocks above a 20 SMA. So this is as of Thursday as well. And so you're going to see now a pretty good washout reading here on Friday, which we're going to talk about in the price action portion of this video. But depending on, obviously depending if you took the brunt of this week, it's kind of a healthy thing, right? We needed some type of washout. We needed to reset that froth a little bit. And, you know, no one's saying we're done, but this is good to see us kind of reset back down. We haven't been down at these levels since June. And again, we're going to open up a lot lower. Put to call ratio spiking. Again, this was as of Thursday, so this number is only going to be higher Friday going into the weekend. I think, again, some signs of fear here are good. Nice to get a little bit of a shakeup. Bitcoin, we'll talk about a little bit more. You know, we've been hesitant on Bitcoin. We've expressed that now 2 weeks, reserving judgment to see where this breakout kind of lends itself. And it seems like we're getting it to the downside. So Bitcoin rolling over on Friday with risk assets. I do believe, as I said last week, or probably the past 2 weeks, you know, I really want to see us stay over. I mean, you could say 110 is the round number. We've covered a lot of ground here in Bitcoin as well, staying above some of these bigger areas, the bigger breakouts from earlier this year. I think around 110 is going to be important. So for now, let's see how it handles it. Let's see what happens if we get down there early next week. Now, I'm going to leave you with one stock. We're going to look at TC2000 here in just a moment, but because of prepared slides, I wanted to throw this in now. Our Quant Rockets momentum model. So again, momentum's hard to come by right now, and so the pickings are a little bit slimmer, but one that I pulled out that looks interesting this week is NRG, and this one here has been it's a recent addition. So this came on 7/25 on our list, so it's been on for 5 days now, but this is a pretty healthy still. We'll see if it can remain healthy. Actionable base, stock near highs, NRG, it's utility kind of energy play right now, and good action here on Friday, even dip buyers kind of coming in for it. So this is our Quant Rockets momentum model. We've got more information on our website about that. If you're looking for fast moving stocks that are acting well and holding up in the market, then that's for you. So next week, in terms of economic data, we've got PMI, services PMI on Thursday, and that's about it. Pretty light week, generally speaking, some Fed speak, but nothing too much besides that. So let's get into some charts here. Stick around. All right, we've got TC2000 loaded up here. We're going to start off with the S&P 500. Let's look at the cash market here. So see if we can find a clean board. Yeah, this might work. All right, so S&P 500, here's what the weekly chart looks like. Not so hot, right? Bearish engulfing week. So we opened at the highs of the week above last week's body and just sold off aggressively and sort of engulfed really the last 3 weeks of trading action. Okay, so it was a down 2.36% week. We tried to push up to new highs. We failed, rejected, and went lower, and we did it on heavy volume. One thing you're going to notice this week is you're going to see a lot of increased heavy volume. So we want to pay attention to that. It's market kind of, you know, sending messages, clues. There's lots of transactions happening. It's, you know, it's capital moving. And so we do have heavy volume weeks across the board. So my old kind of saying here on these types of weeks is this is a week to take notice, right? This is a significant week to pay attention, right? Doesn't have to be a major turning point, but it's certainly something that should have your attention if you're an active trader. So again, let's go to a daily chart now and look at this action. I think you had a couple of clues here to kind of transition and switch gears a little bit this week. You had to be quick, as you know, turning points, you always need to be quick. But Thursday really was a pretty loud, important session to pay attention to. Again, we opened up at the highs of the session, and this was post earnings. It's going to drive me nuts. Meta and Google or whoever reported good earnings. Markets were happy. They were celebrating Thursday after market, or Wednesday after market, and then Thursday before. And we opened up towards those highs, and we basically saw the high tick of the day at the open and aggressively kind of sold throughout the day. So this here, on the amount of volume that was kind of pouring through here, is a little bit of a clue. And you know, you had a bunch of open high, close low sessions that were starting to form. So you already kind of felt a little bit of the weight of the market, right? These are all just kind of little breadcrumbs that's leading up to obviously a turning point now, which is much easier to see in hindsight. But we had the stocks, we had the market opening at the highs, heavy volume throughout the session, closed at the lows. And then you kind of ask yourself here on Thursday, I think I posted a chart on X on Thursday of this action, basically saying, okay, what's the close going to look like? And then what's the close of the week going to look like, right? Like these are the two important things you now need to put together. Is there going to be follow through to this move, or is this just a 1 day kind of, shakeout again, and then a bid comes in immediately? Well, a bid did not come in immediately. We saw a gap down, and again, we saw aggressive selling and heavy volume throughout the session on Friday, post jobs report, and post, a handful of other headlines. So there is now some damage here. We've taken the wind out of the sails of the market a little bit, and we have finally now, if we put on our QQQ 3% correction, we finally got a bigger than a 3% correction here from Thursday high to Friday low. We're at a 4% correction, right? Which in the grand scheme of things is still extremely mild and potentially early. So now where do we go from here? What's things look like after 2 days of selling? We can throw on Bollinger Bands and we can say, well, 2 heavy days of selling. We're still not at the lower Bollinger Band. So let's at least pay attention to this 617 area, because, we haven't even reached a lower Bollinger. We can look at the recent price action, which is where we've been finding support and buyers kind of coming in. And again, that kind of coincides nicely with this 618 area. So, we've got some levels underneath us that we have not yet hit. And so we want to start to think like, okay, where can this market go if it's, going to stay in corrective mode? And it seems like it wants to stay in corrective mode right now. That's certainly what all the evidence is telling me. So what I would look to is the prior all-time highs in February 2025 that we broke out of in June. That's going to be an important reference point here for the SPY. And that's, again, kind of now, sandwiching this zone here of 613 to 618. And that would give us a very, very mild pullback target of just 4% here in the S&P 500. Now, again, I still think we have room lower. We have potential room lower here after a, ballpark 30% move. I think, even the healthiest markets can correct 7%, 10%, right? That's not unreasonable for the market to move that further, that much down in such a, since it went up in such a short amount of time. So I think what we want to think about is these targets, and we can do it here, I guess, in real time of just, let's see where a 10% correction gets us in the S&P 500. Again, we're not making predictions. We're not saying it has to get down here, but that gets us to about 575 or so, right? 575. So if you think we can get a 10% correction out of the market here throughout the month of August, that would bring you very nicely back into this old range. It would bring you to some prior, pivot points, bring you to this little pivot spot in May, and a gap that kind of never got filled here in May, right? So that's about a 10% correction. That's plenty of room below the market of where we currently are. Again, we don't do this because we're saying that's where it's going, just because we're throwing pie in the sky. We're doing it just to be an open-minded kind of flexible trader to understand, okay, if we want to be trying to buy a pullback, if we want to think about where this market might be able to go based on historical contexts, then we start to map out these areas. So a 10% correction would bring us to about 577 or so, and if we kind of look at a 6-7% correction, kind of coming right back down to the prior lows, maybe fill this gap in here, you're looking just under the 600 area for a potential correction area. So again, if we want to just draw this out real quick, then we can put this here, and then we can revisit this next week. And what I would be doing here, and what I am doing now, is starting to just look at a buy list, start looking at stocks that I want to own at cheaper prices. if you have been following these videos for a long time, this is something that, you know, we talk about back here in March and April when the market starts to go on sale. We start to build our shopping lists, right? So these are all tactics. These are all ways to kind of view the market, to anticipate what's to come, and to potential and to not get blindsided, right? Like that is the most important thing, is to be risk aware. So 10% correction gets you down there, 6% down here, and then our first more mild 4% zone, which would keep things very comfortable, is if we can hold up here around 615 or so. So let's see if we can hold this little mattress zone of support, the prior highs, the prior supply zones, and let's see if this market can stay contained over the next week or so. I think that's going to be the important spot. But right now, it's build your shopping list time. Nasdaq 100, you know, it's all kind of the same thing here, right? We've got the big reference point, intermediate term level, the breakout zone from 538. We're pretty much at a, I think, 4% pullback right now. If we were going to go retest that big breakout zone, that's about a 6.25% correction here in the Nasdaq 100. So something to, you know, at least pay attention to right now. So, you know, as of right now, I would say that things look semi-contained. I know the move is fast. I know the gap is not great, but you know, if we look at high yield spreads, I mean, you got a little bit of concern out here. In HYG, for instance, you know, you can see some of the volume coming in, some of the rollover. You can look at some of these ratios, and they're starting to, you know, show a little bit of signs of stress. You've got obviously the VIX that saw a nice sharp move up, but let's see how this plays out into next week. Let's see what kind of follow through there is, what kind of rotation we get, and you know, kind of take things one day at a time. If we look at our Mag 7, which we said we would do here, so Mag 7 again was mostly down. It was Meta that was really kind of bucking the trend this week. Microsoft, that was who reported earnings and really helped us rip on Thursday, was Microsoft beat. So Microsoft, and who is the other one? Okay, yeah, Meta. So Meta and Microsoft was that Euphoria combo on the open on Thursday. You can see Microsoft, the gap basically got filled. Nvidia starting to kind of break this accelerated momentum trend, but it's still hanging in there. Google's starting to, you know, suffer a little bit of short-term technical damage. Amazon looks probably the worst now because that broke its bigger trend line. Meta is still holding up well, and Tesla's just in its own little universe here, kind of still consolidating. So, and, you know, we always forget Apple, but not looking too hot here in the short term either. So, you know, if you want to look at some of the heaviest weightings here, of course, in the market cap weighted indexes, most of these are looking a little bit tired to be as, you know, optimistic as possible. Meta's the best looking still, but you know, it looks like it wants to at least kind of come back and maybe consolidate a little bit. So that's kind of the landscape there. If we take a quick look at bonds, they do look about as good as they've ever looked in the past 4, 5, 6 months. They're starting to get their act together. They're maybe actually starting to hedge a portfolio. TLT, for instance, looks like it's trying to bottom out and make a move. You could look at IEF, which looks better as this starts to move up. So if you're betting on you know, the Fed starting to cut, if you're looking at some safety here, then maybe you've got some bond movements ahead of us that can start to take us back towards the year-to-date highs. I think it's interesting. I think gold, as I've been saying, is interesting. It still hasn't got the breakout kind of catalyst to get it to move out of this range, but it's certainly primed here. Pay attention to it. Same thing with GDX. You can look at the gold miners if you're looking for more beta. Oil has seen some volatility. It tried to get going, and then it kind of rolled back over into the close here on Friday. So that one's still a little bit tricky. Bitcoin, just looking at the IBIT ETF, or actually we can look at spot price here on the left-hand side. I mean, we talked about it earlier, but it was consolidating in a pretty tight pattern here going sideways. Now it's starting to roll over and break down. So we want to see how it reacts at this 111, 110 area. This is kind of the old breakout zone from late June, early July. IBIT, you'd be looking more around like 62.5, 63 to see if it can hang in here, see if you can find some buyers. That's kind of the big muscle movement for gold. What else? Do we have anything else? I'm sure there's plenty of other things to to look at, but that's about all I have on my list. So right now, got some volatility, trading action picks up. Build your shopping list. NRG is the one that we highlighted earlier. Again, if you're looking for momentum names, go check out our Quant Rockets list. It updates every day. And that's about it. So good luck. Hopefully everybody had an okay, was not blindsided about around this volatility this week. There's lots of movement, lots of things happening. It's summertime. Volumes are lighter, which typically can mean, though, that markets can move a little bit quicker and doesn't take as much dollar volume to kind of move some of these stocks, especially at the individual level. There's a lot of dispersion out there on Friday where you had sharp stocks down and up. So you got to pay attention to that. And we are still in earnings season. So that's it. Do some homework this weekend. Prep for next Monday. It should be a fun one. And thanks as always for tuning in. We've got links in the description of this show. We'll see you next week.